Good evening, guys. This is Modupetemi Forex Academy. As you all know me to be what Modupetemi FX. So I am back again with another strategy, but this time around, I actually decided to share my blueprint, the mastery that many mentor have actually what be keeping away from you knowing about the real market move. So over a couple of weeks, days or months, I'm going to be sharing a step by step video on how I explained my blueprint. I'm going to be sharing my price action blueprint step by step. So endeavor to follow me step by step, right? And if you actually enjoy the content, please drop at the end of the video that you actually need more content like this. Over the time, I've actually tried to upload a pure price action content, but the review I got back from it is not really encouraging that people actually choose to be an indicator, right? But the bitter truth is that to be successful with indicator in this industry that we are, it's really going to be something that is not really convenient. It's not effective, because the big truth is that whatever indicator you are using, you must be able to see price action in that indicator. You must be able to see your price action in that indicator. That is what I've learned, and even all big people in this industry, professional traders, successful, profitable traders, that is what they are going to tell you. If they are even using indicator, they are just using that as an added confirmation. So I'm going to be sharing my blueprint, my pure price action blueprint, where you don't need any indicator, or you will just be reading your Japanese candlestick. I'm going to be making it as simple and breakdowns to the simplest form. I'm going to break it down to the simplest form, that no matter your experience in the trading, you will get it. You're actually going to get the content. Sorry. I'm sorry for the interruption. So as I was saying, I'm going to be sharing a step-by-step guide, step-by-step video, dropping a content on price action, pure price action. So guys, I'm going to be starting from the basic, from the bare basic, whereby we all start as a new buyer, that we're a newbies in the trading world. And as a newbie, like a new child that just got to kindergarten, that just got enrolled into the creches, the first thing they will always be taught is what is A for apple, right? B for ball, right? 1, 2, 3. And so that is how the trading industry is too. The trading industry, the financial market is all about. And the A for apple in the trading industry is nothing but your market structure. Market structure is the basic of, or is the fundamental, that the moment you miss it out, it's really going to be very, very hard for you, very difficult for you to be successful, because it's not like a child that does not know 1 to 3, that does not know the alphabet that we have in English. How do you want to make sentence? How did you want to read compression? How do you even want to communicate? So the major communication that we have in the financial market is nothing but your market structure is the fundamental basic that you must understand the pros and cons of it. So I'm going to be, for the purpose of this video, I'm going to be using boom 1000. I know we all love boom and crash. They are very massive pair that can actually give you very quick profit once you know what you're doing. The same way it can give you a quick profit is the same way it can send you back to trenches if you are not trading in line with the trend. So for the basic of this video now, the major thing, the fundamental thing that we have in the market is that there's what we call market structure. And when we talk about market structure, basically what the market is telling us is that this is what we all read in our textbook. We have something like an higher high, right? That will have this higher high, we have this higher high, right? We have this higher high, higher high, higher low, right? We have this higher high, higher low, right? That is all what we have been taught. We read in the words in the textbook. We might have come across it on YouTube too. That this is what we call an uptrend, right? Whereby market is making a series of higher high, higher low, right? Higher high, higher low, right? Whereby market is making a series of what? Higher high, higher low, right? Our market is making a series of higher high, higher low, right? This is what we have been taught in what we read in the what in the market, in the textbook. Now, this is what we call a textbook view of the market. Hardly would you ever find this in the market. By the time most of people have read a lot of books, Pagam, the breakthrough in market structure, the mastery in market structure, by the time you open your chart, this is what you will not see anything like this in your chart. Rather, you'll be seeing an entire different things like what we have here. And this is where the confusion starts from. This is different from what I read, this is different now. This is what we have here is what we call the textbook view of the market structure. Now to the main chart, the proper one, the main chart that we have in the market. This is what we have in the market. Ideally, we can't have something like this. In the market, we are going to have something like this, right? We have an higher high, right? We have higher high, higher low, higher high, higher low. Then we have a what? An higher high. This is entirely what we have in the market. Right? This is what we have in the market. Right? This is what we have in the market. We can't have something as clean as this. It has to be as clean as this. Well, everybody's going to be rich, everybody's going to be profitable. When you come to your market, this is what you have in the market. Right? This is what you have in the market. Now this is what we have in the market, right? So this is what we now call, this is the real life structure that we have. Now what we have here is, let me change the color. So now what we have here, right, is what we call our internal structure, or we call it complex pullback. Now we call this complex pullback or internal structure, that because once you'll be able to establish your swing, so here now this is what we call our swing high, our swing low, swing low, swing high, swing low, swing high, right? This is what we call our swing low. Now let me actually break it down to the simplest form of it that you don't get confused. What we mean by a swing low is that a swing low is the lowest point, right? A lowest point in the market that causes a swing high. A lowest point in the market that causes a swing high. Obviously, looking at this now, this is our swing low, right? And this is our swing high. This is our swing high, and this is our swing low. Now on this market, on the real market, now this is going to be our what? On the real market now, this is going to be our swing low. This is our swing low, and this is our what? Our swing high. This is our swing low, and this is our what? Our swing high. Now once you establish this like this, and most times in determining your swing high and your swing low, your swing point, it's always advisable you work with with your higher time frame. Now as the trader, I would advise you work with 2 time frames. Though some will tell you 3 time frames, by the time you start making it 3 time frames, you start getting it so bored. Pay attention to to 2 time frames. Now pay attention to 2 time frames. I can tell you that for the purpose of this video, and based on my experience so far, that majority of the traders I will have are always an intraday trader or a day trader. And if you are an intraday trader, the best time frame you should be working with is your M15, right? Your M15 and your H4. Now your H4, this is where you determine your what, your higher time frame you are choosing now. It is where you determine your swing high and your swing low, your swing point in the market, and at the same time you determine your what, your your order flow in the market. What we mean by order flow is that at the longer run, where are we in the market? Are we in an uptrend? Are we in a downtrend? And in, for you to determine that, you will only do that in your what, in your higher time frame. So just pick two time frame, that the two time frame you are picking now, pay attention to two time frame. You can just open your daily time frame, look at your what, your swing point, look at the order flow on your daily time frame. Okay, are we bearish? After you've established that okay, we are bearish, you can come down to your next time frame, which is your 4 hours time frame. On your 4 hours time frame, you mark out your swing point. Most times, from my little experience of the market, I have come to realize that most times 85% of the time, when you mark out your what, your swing high and your swing low on higher time frame, on your daily time, on 4 hours time frame, is going to align together with your what, with your 4 hours time frame. Like so, I've actually talked about what, I've talked about your swing point, your swing high and swing what, swing low, right? And I've talked about your what, your complex pullback, your internal structure. I'm still coming back to this internal structure, but let me make justice to this word, to this swing high and swing low. So now, having established this, now let's go down to our what, to our 4 hours time frame, and we what, we mark out our swing. Now on our 4 hours time frame, now having something like this now will get you confused, but you don't need to confuse yourself. Now looking at this here now, obviously, looking at this now, this is where your, this is going to be my what, my swing high. Let me start from here. My swing high. Oh, okay. So this is going to be my what, my swing high. This is my swing point here, my swing high, right? This is my swing high. Okay, there's another thing I didn't explain. Or what we call breaking market structure. So looking at from here now, our breaking market structure here, let me copy this, right? Let me copy this. So let me use it to explain my words. My breaking market structure, let me change the color. Let me use red. That way. So this is what we call our breaking market structure. My breaking market structure is here, right? My breaking market structure is here, right? My breaking market structure is here. That is my breaking market structure, and I have it here again. This is my breaking market structure. So this is my breaking market structure. Come on. So this is my breaking market structure. Why now? Okay, this is my breaking market structure. So this is my what? This is my breaking market structure. Now, once you open your chart, the first thing you need to do is just for you to what? To look at your higher time frame. Now, looking at this on my daily time, on my 4 hours time frame. Now, this is what I said. This is my what? This is my swing high, right? This is my swing high, and I have this here as my what? As my swing low. Right? I have this as my swing low, right? Then I have this as my what? As my BMS. I have this as my BMS here. Look at, I have this as my BMS. So I have this as my BMS. So once I'm able to establish that as my BMS, right? So let's go to our, so my next higher high, my next swing point is this now. So now, this is where we start getting the confusion now. Now, remember what I told you about the swing point and the swing high? Wow, I don't want the video to end it, so we'll do part 2 of it, where I don't want the video to be too long. So remember what I told you about the swing point. Your swing high is the highest point. Now looking at this, now many of you now have to choose your what, your next higher, your next swing point, not just swing point. Now many of you will go for this, whereas this is not your swing high, because this is not the what, the highest point. The highest point is this. This is your swing high. This is your swing high, and this is your what? Your swing low. Now this is where you start making what? Start making problem. Now look at this. Now this high, obviously this high is higher than this, so this is going to be our what? Our new higher high, our lower high, sorry, and this is going to be our new lower low. Remember what I said, the lower low, the swing low now is the what? The lowest point that cause a what? A swing high. So if this is our new lower low, this is going to be our new lower high, and this is going to be our what? Our swing low, because we have a what? A break in market structure here. So this is how you continue like that. That is how you continue like so. Like I said, that most time with my little experience, by the time you switch to your what? To your daily time frame, all those swing area that we mark out is going to align together with our what? With our higher time, our daily time frame. So let's go to our daily time frame. So you can actually see what I said. Do you see what happened there? Do we have it as a, you can see that we did have the same thing. We did have the same thing, right? So we have this card. This is our lower high, our big market structure. Then we have our lower low, our lower low. So this now is still, now this is not a, look at now, this is just a little difference here. Now our new lower low is this on our daily time frame. Our new lower high is this, right? So that is our, this is our new lower high. This is our swing high, and this is our what? Our swing low here. Our swing low is actually here. We've not formed a new swing low. The swing low is yet to be formed because we've not gotten a reasonable pullback. But this is our recent swing high on our daily time. So with this, we, the last BMS we have was this BMS here, BMS to the downside. So this gives us the word other flow that we're actually in a downtrend, right? We're actually in a downtrend. So we can conveniently go down to, we've established that on our what? On our daily time frame too, on our 4 hours time frame too. So we can easily go to our 4 hours time frame, mark out the range there. Right, mark out the range on our 4 hours time frame now. So looking at this here now, we, so now we've not really gotten a we've not gotten a confirmation on our what? On our swing low, but that doesn't mean we cannot trade. So if you actually want to trade this now, what you need to do is just for you to mark out your trend, mark out your current range on your 4 hours time frame, then go to your entry time frame, your confirmatory time frame, which is your 15-minute time frame, right? Your 15-minute time frame, and then you start framing your setup. I start framing your setup with the use of what? Your market structure. So let me just mark out. So on my 4 hours time frame now, let me enlarge it here now. So the next video I'm going to be talking about the complex pullback in details. I'm going to be talking about the what? The next video I'm going to talk about what? The complex pullback, which is your internal structure, how you can what? You match up your what? Your major structure and your internal structure before you can have a before you can have a change in market structure on your daily time frame. On your higher time frame, you start seeing the what? The changes from your what? From your lower time frame. The changes you see in your lower time frame is what we call internal structure. For example, now if your higher time frame is switching from a bearish down, from a bearish trend to an uptrend, you start seeing that changes. Your lower time frame must align, must also be switching from bearish to an uptrend. In a case whereby you don't have this, automatically whatever trade you take are not confirmatory what? They are not confirmatory trade setup. Most of the time you end up what? They end up using as the what? As the liquidity. They end up looking as a liquidity, and that is how you start blowing your account. So if you actually enjoy this content and you want a continuation of it, you want more video of this, drop in the comment section your comments to show that you actually drop in the comment section that you need the word the continuation part of it, you actually enjoy the content. That will actually go a long way. And please do well to what? To share with friends and loved ones. That is how you can actually what? Make me happy, right? So if you are here to subscribe to my YouTube channel, please do here to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. I'll be waiting for your what? For your likes and your view, and I'll be waiting for your feedback in the comment section. If you actually enjoy this type of content and you want more of this type, drop in the comment section that you need more of it. Just drop more of it, more of this content, and I did appreciate. Do well to what? To share. Alright, and I will see you in the next video.